Hello and welcome. You're watching the newsroom right here on ET Now. I'm Ajaya Sharma. The technology sector is having its field day led by Tech Mahindra. Well, HCL Tech is also giving some company. It is an okay day actually. If you look at broader markets, much bigger sparks are flying over there. Broader markets are doing very well, being a Friday. So individual pockets, Gati has suddenly shot up 7%. Chemicals, of course, we are looking at fertilizer and chemical stocks. Deepak Nitrite, Deepak Fertilizer, and many others actually gaining smartly in trade. So good day for broader markets, and that's the starting point of the discussion I'm going to have with Jitendra Gohil, Head of Research at Credit Suisse Wealth, who's joining us now. And Jitendra is of the belief that at current juncture, despite of the rally, there are areas of pockets of value in the market and the broader market in particular. Jitendra, great to have you, like always. Let's start with this point. Can you elaborate for us what are the areas you are researching in the broader markets, themes which look attractive on valuation front versus the kind of growth in earnings which lie ahead for them?
Hi, Ajay. Thank you for inviting me on your show. So basically, what we are seeing in the market is that in broader market is doing extremely well compared to the frontline stocks, and hence Nifty has risen a bit and has been a range bound, but the broader market is doing extremely well. So what we think is that one should focus on structural themes, and I feel that there are pockets of very good opportunities. For example, we are getting more and more positive on the hiring outlook, which is there for the next few quarters or so. So we think that the staffing companies can continue to do well in this kind of market. So we think that over the next few years or so, the companies can grow their business as 20 to 25% in this space. So we are positive on staffing companies. As you have already mentioned about the chemical space, there we think the valuation has seen significant expansion. But even at this point of time, we feel that there's a good opportunity that these companies may see exponential growth over the next 5 to 10 years period. We are seeing that Indian companies are coming out with good capex plans. And going ahead, given their higher ROIC and free cash flow business, I feel that the valuation story is still there. We think that valuation can expand even further from here. This coupled with good growth opportunities, I feel chemical space is looking very attractive from a structural perspective. And last but not the least, we are also positive on API space. India is just like 6% in terms of pharma API export market compared to 48%. And companies are looking at India for contract manufacturing perspective, for diversifying their supply chain. And Indian companies are also scaling up their business into higher value add products. So I feel pharma API is another sector where we think there are good opportunities.
Great. Yeah, you're right. In your observation, Jitendra, there's big hiring commentary coming in from large cap IT companies and many others actually. You just name lakhs and lakhs of people are being hired, especially freshers and mid-tier at the starting level. API, of course, we are seeing at Glenmark Life, a pure play company going for IPO, and big deals happening in other API names like Shilpa is wanting to demerge its API. So there's action there. Let's talk about, let me play the devil's advocate for a moment, Jiten. Whatever happened in China, there is clearly outflows which is happening from several emerging markets, including India. Is it of our concern, or do you see the flows from domestics, both HNI, retail, family office, DIS, all of that so healthy that it will be able to make up or absorb the FI selling?
There are two parts to it, Ajay. First of all, whether FPI flows are coming to emerging market or no. So basically, if you look at over the past 1 year or so, India has actually gained disproportionate share of FPI inflows. And as far as I know, after China, India is the only country where we have seen significant inflows within the emerging markets. And India has been doing pretty good in terms of even attracting FDI inflows. So basically, India's structural appeal has improved even during the pandemic, and India was one of the worst impacted last year in terms of our GDP growth. However, in terms of flows, we have seen significant improvement. And this is because India's structural appeal, in my view, has increased. You look at ROE improvement from here onward, it's going to be expanding. Debt to equity ratio has fallen very dramatically for the companies, and the capex cycle is expected to pick up. So all these parameters is pointing towards India's improving structural appeal versus other emerging markets. And what is happening between US and China, I feel that FPIs will look at some kind of alternative market and where India stands to benefit. So that is on a broader scale. Now, coming to what we have seen, FPIs, yes, they are selling. And for the past couple of monthly reports, we have been highlighting that India might see a kind of outflows from foreign institutional investors, given India's valuation premium, which is at a record high. And it has even gone higher because the China's valuation has fallen and India's valuation has risen. So the relative to other emerging markets, India's PE premium is at a record high levels. So there is a risk that FPIs may start to cut their exposure to India a bit. But I feel that that's not a big challenge for India because of the kind of reasons that I mentioned about structural improvement. So we think that FPI inflows will be tepid, but it won't be a dramatically lower, or you won't see a big sell-off in India just because of these higher valuation. Coming to the retail flows and domestic flows, yes, they have been improving. And I feel that that's just a tip of an iceberg looking at the kind of under-penetration of financial assets in India. So that is a structural theme that I'm pretty okay. So we might see a little bit of selling pressure by FPIs, but I don't think it would be very dramatic, especially the dollar index is now seeing some kind of a weakness from its peaks. Last couple of weeks, we have seen the dollar index has fallen from 93 to close to 92 levels, which is a positive sign for emerging markets. So I don't think we are going to see a very significant outflows from FPI, at least in the near term.
Jiten, when you're having your conversations, discussions with your, ultra high net worth individual clients, family office representatives, I'm wondering what kind of discussions are being done regarding the IPO street, the primary market, be it Zomato's of the world, Devyani International, such interesting companies, pure play API companies, some diagnostic companies, the tile companies coming to the market after almost 10 years. We're seeing that kind of so very good, rich mix of companies. Now, some of their valuations also seem quite rich. But talk to us about how you are scanning the landscape on IPO front.
See, I think this was long due. So if you look at India's structure, I feel that India still has good potential to get organized, and most of the companies which are outside, listing space are doing actually very well. And as we see more and more domestic institution as well as investors participation in Indian equity market, the depth of Indian market should go higher, and even the breadth also should widen. This is clearly been shown. What we have seen, the new age technology companies, new age platform companies are getting listed despite making losses. So that shows the maturity of the participants that are now there in the Indian market. However, in terms of valuation, so we are scanning very, at a very minute detail, because see what happens generally in the bull market, a lot of companies come out with exorbitant valuations, and that gets absorbed very easily. However, we continue to focus on long-term structural stories and then only recommend stocks to our investors. So I think a little bit kind of a caution we are approaching. We are approaching with little bit of cautious because I feel that it is also important to see where these valuations are and whether this is at a right price or no. So I feel that we are going to see more and more companies will try to come come with an IPO route as the depth and breadth of equity investors are actually improving, which is a good sign. But on the other side or a flip side, I would say that the valuation is really concerning for some of the companies as of now, in my view.
Right. All right, Jiten, we'll let you go on that. And thanks so much for your time. Always appreciate your inputs on the channel. That was Jitendra Gohil of Credit Suisse Wealth